Howdy, everybody. I thought I'd spend a couple minutes talk about tax deductions. It's not uncommon for an owner operator at Crete to make a gross revenue over $200,000 for the year. Now, they don't get to keep all that. they got to deduct all their business expenses, including fuel. Fuel is your biggest expense, $50,000 easily for a year. So you start out a ballpark figure of 200 gross, knock off 50. Now you're down to 150, and then you're like truck payments, $3,000 a month for truck payments. There's another 36,000. Health insurance could easily be, $1,000 a month, maybe more if you have dependents. Um, Dental, vision, all that stuff. All those insurance premiums are deductible. But when you think about other things that are deductible, depreciation on your truck is deductible. Um, you take out a loan for an APU. The interest you pay on that loan is deductible. Um, the fuel, the hours that you run your APU can be a deduction. You have to check with your accountant, but I think they go by the hours or by the gallons. I think it's by the hours. You track your hours, how much hours your APU is run. And there's APU insurance. You can get insurance on your APU. APU costs 15 grand or more. A lot of times you want to have insurance on that because it's not covered under your regular truck insurance policy. You'll have to have separate insurance on your APU. That's a tax deduction. So you want to try to identify as many tax deductions as you possibly can because you're going to get your taxable income as low as you possibly can. It's not uncommon to get your taxable income down to $75,000 or less. That's if you're a sole proprietor. Now, if you really want to lower your taxes, you form an s-corp because you start paying yourself as an employee. That would lower your taxes. But other tax deductions are like simple things. Paper towels. Paper towels is a tax deduction. Those little blue shop towels, if you use for wiping up grease and oil, tax deduction. Office supplies, tax deduction. Computers, laptops, tablets, all tax deductible. If you use it for business use, most people use it for both, but you can write it off on your taxes. Cell phones. I have a Samsung Galaxy Z Fold 3. I've had it for a few years. Z Fold 7's out now. But $2,000 phone, tax deduction. The monthly subscriptions for like the cell phone with Verizon. I have Verizon. Your monthly cell phone bill, tax deduction. Um, you just really got to pay attention to it. Tools are all tax deductible. Generators, like you have a home office, that's tax deductible. You have a generator for a backup power supply, tax deductible. I even have a solar generator that I deducted, and I deducted the solar panels for the solar generator. So there's a lot of things you can deduct. Uh, I use ATBS as do many or most owner operators at Crete. They use American Trucking Business Solutions for accountants. Even their services, which I think is like $80 a month, is tax deductible. So this is how you lower your taxes. Anything you buy at a truck stop, a mud flap, LED lights, or lights in general, all tax deductible. CB, tax deductible. Little nuts and bolts, tax deductible. You save all your receipts, you turn all that stuff in. You know, it's not uncommon if you're really on top of your game. Any receipt, any receipt at all, if it's $1, send it in. If it's a business related receipt, send it in. All this stuff is going to accumulate over the course of the year. You know, Miscellaneous supplies, highlighters, things like that. Send in all those receipts. You buy a printer for your computer, send in the receipt. You know, you can upgrade your computer. You don't have to be stuck with a 10-year-old computer. Upgrade your computer every couple of years. I mean, technically, you could upgrade it every year. It's all tax deductible. Obviously, the more you spend, the less you're going to be able to save. I mean, you can't get too crazy with spending things for that just to lower your taxes. I mean, it's nice to spend money on creating your tool collection. I think I spent probably close to $20,000 on tools over 10 years, but I really had the bug for Milwaukee tools, and I bought a big tool cabinet that was tax deductible. I bought a big tool bench, tax deductible. I bought Milwaukee power tools, all tax deductible. The batteries for the tools, that's tax deductible. Sockets and wrenches and ratcheting wrenches and screwdrivers and you name it. You know, it, it adds up quite a bit. Now, I did get the veteran discount. Home Depot. I bought a lot of my stuff through Home Depot because they were giving me like a 10% veterans discount. And back when I was doing this a few years back, when I bought most of my tools, there was no limit. So I bought almost all my stuff through Home Depot. And then a few years later, after I made my purchases, they came out with like a $500 limit for the year. But, you know, other tool suppliers, Acme Tools and Northern Tool, they all offer veteran discounts. You get 10% veteran discount. And then typically what happens if you turn in a receipt for a business expense, it's like another 20% discount because you save $2 for every $10 you spend. That's the benefit of having that tax deduction. So when you think about something that's costing you $100, you're going to turn in that receipt and get the tax deduction. It's actually the true cost to you is only going to be $80 because you realize 20% savings because it's a tax deduction. That's the impact it has on your taxable income. So general rule of thumb, 20%, of the cost is going to be tax deductible. So there is quite a bit of incentive there for you to spend money as a business owner. Um, Same thing goes with buying newer equipment. Everyone wants to have a truck that's paid off, but if you pay your truck off, you could pay more in taxes because you're not getting the depreciation value for that year. It's like, woohoo, I paid off my truck, and then the accountant comes to you and say, guess what? You owe more in taxes, and you're like, what happened? He's like, well, your truck is fully depreciated. This is the government giving you incentive. Go buy a newer truck. You want that tax deduction? Go buy a newer truck. Things like that. So even with an APU, you deduct the interest on the APU if you have a loan. You deduct the cost of the APU, and then you get a deduction for the number of hours you run per year for the APU. So you look at that cost of APU and you're like, is it worth it or is it not worth it? You got to think about the advantages it offers, not just in fuel savings, but in tax deductions. You'll have something to write off. Many guys want real estate because they can deduct the interest on that home loan. I don't know if I'd go out there and have a bunch of kids, but all those dependents would be a tax deduction. So, but as a small business owner, you got to think strategically, and part of that strategy is your tax strategy. It's like, how can I take advantage of all these deductions? The government's going to give me, these deductions, and am I making the maximum use, or am I missing an opportunity because I'm not purchasing things that I probably should be, or I'm not turning in the receipts. A lot of my paperwork, day to day, operations is turning in receipts for tax deductions. That's one of the big challenges is keep track of all your receipts. All your maintenance repairs, tax deductible. All of it. You buy tires, tax deduction. Tow truck, tax deduction. Freightliner repairs, tax deduction. So you start out with a gross revenue of 200,000. Your expenses typically will be, probably another 100,000. So now you're looking at a taxable income of about 100,000. But then you start adding up all these deductions. Take advantage of every single deduction you could possibly find. Turn over every rock. Look for every single tax deduction you and your accountant can think of. And you get your taxable income down to 75,000 or lower. If you still can't get your taxable income down, you're paying too much in taxes, then you really got to think about changing your business structure to an s-corp. Because s-corp, you're going to pay yourself as an employee. Instead of having a taxable income of, say, 75,000 for the year, you might only have a taxable income of 60,000 for the year. But you have another 30,000 in your business checking account that'll be like pass through income that's available to you that you won't have to pay taxes on. So that's why guys form the S corp. It's not that they want to, you know, have to pay themselves as an employee. There's tax advantages for doing that. So these are all tax strategies, and the tax code is not getting any simpler. The only way to get away from the tax code is go to a flat tax, and politicians don't want to do that. So Democrats like progressive income tax, where the more you make, the more they take, and Republicans like tax deductions. As many as you can create, they like it. They want to give you as many tax breaks as you can. Um, Sometimes they call these loopholes, but they're there to help you as a small business. I know no one likes to talk about politics, but Republicans support small businesses and they create a lot of tax advantages for small businesses. They try to keep your taxes low. Democrats want to tax you more and they want to eliminate these deductions and take away some of these tax loopholes, including the S corp. If it was up to the Democrat Party, you wouldn't have pass-through income. They would eliminate the S chapter of LLCs, S corps, altogether. They take that right away from you, so that you would have to pay more taxes. So tax is a big deal. I don't do my taxes on my own. It's too complex. When I file my annual tax return, it's like 40 pages long. There's no way. There's absolutely no way. It'd be a complete waste of time to try to do your taxes yourself. You have an accountant. Everything is automatically transferred, IFTA, and all that stuff from Crete to the accounting firm electronically. You don't even have to fool with it. You just pay them like $80 a month. They take care of your taxes. If you're an LLC or a sole proprietor, you'll pay quarterly taxes. My quarterly taxes have been as high as $5,000 for the quarter. Uh, if you're a S corp, then you're paying yourself as an employee, and you'll pay regular payroll taxes. But tax is something you got to pay attention to. There's a lot of money tied up in that, a lot of opportunities as well. If you really want to be, a top tier owner operator, then you got to thoroughly understand tax strategies. All right, guys, that's all I got for you. Still watching. We'll see you on the internet.